坚决贯彻党中央、国务院的决策部署。今年以来呢，按照党中央、国务院决策部署，根据全国人大常委会授权，财政部提前下达了2020年部分新增专项债券的额度是1.29万亿。截止到3月31日，全国各地发行新增专项债券是1.08万亿，占下达额度的84%，发行的规模比去年同期呢是增长了63%。预计呢会提前两个半月完成既定的发行任务。各地发行的新增专项债券呢，使用到项目上面去的呢是8255亿元，占发行额的77%，全部用于铁路、轨道交通等交通基础设施、生态环保、农业水利、市政和产园区等领域的重大基础设施项目建设。其中呢，各地用于符合条件的重大项目资本金的专项债券的规模。
About 130 billion yuan were used for qualified major projects, which has encouraged effective investment with social capital. The average term of such funds is 14.5 years, including 933.1 billion yuan of long-term bonds over 10 years, accounting for 86%, which is higher than that of 2019. So the term of such bonds can better fit the actual terms of projects. So generally speaking, these additional bonds have been effectively used in the first quarter. The March 31st State Council Executive meeting decided that on top of this year's quota already made available, more of such quota will be expeditiously allocated in advance as per due procedures. This decision is made considering the budget of 2020, the needs of local projects, and the issuance and use of these special bonds. And our ministry is stepping up the follow-up measures. As for where the money will be used, they will continue to be used for key infrastructure projects, including transportation infrastructures, energy projects, ecological conservation, daily services, cold chain logistics facilitations, and infrastructure for city administration and industrial parks. To meet the need of epidemic response and investment, state-level key strategic projects will be prioritized, and regeneration of old residential areas and cities will receive more fundings. Localities will be allowed to use such funds for administration projects, including emergent medical treatment, public health, vocational education, heating and gas supply, including the infrastructure-related new technology such as 5G, cloud computing. As for the quota, such funding will be directed to where the projects are and weighed towards areas with key projects, low risks, and most of such funds will be used for key projects to boost social capital investment. The Finance Ministry have worked with relevant departments to make early preparations, including help local governments with the reserve, selection, and approval of projects. After this batch of bonds were allocated, they will be quickly used on projects. Soon they will be seen as actual work amount and play their effective roles in boosting economic development. The Finance Ministry also attaches great importance to the financing and development of smaller businesses. Since the outbreak, we have worked with relevant departments and taken a series of measures. We have lowered government-backed financing quarantine fees and the fees of re-guarantee institutions of local governments, exempt counter guarantee requirements to improve our services and provide more financing support to smaller business. When conditions permit, government-guaranteed startup business loans will be extended, and we will continue to work with relevant departments in this regard and guide financial institutions to scale up support for smaller businesses and help them to overcome the difficulties. Now I would like to give the floor to Mr. Liu.
Our friends from the press, good morning. In the face of the COVID-19 impact on SMEs, the PBOC has been guided by the Xi Jinping thought on socialism with Chinese characteristics. We've implemented the decisions taken by the CPC Central Committee and the State Council, acted quickly and taken the initiative to respond to the new challenges and support domestic demand, to support the resumption of production and guaranteeing employment. We've taken measures to support targeted financial services for epidemic containment, resumption of work, and the real economy. First, we've kept the liquidity reasonably abundant. After the market reopens, after the Spring Festival, we've provided 1.7 trillion yuan of short-term liquidity. In early this year, we've released 800 billion yuan liquidity by 0.5 percentage point. And in March, we released a further 550 billion yuan long-term funds for inclusive loans. Second, we've provided targeted relending and rediscounting support by establishing a 300 billion yuan special relending for epidemic prevention, more than half of which will be invested in SMEs. And the actual financing cost for SMEs after rediscounting is less than 1.3%. Less than 1.3%. On top of that, we have increased 500 billion yuan of credit rediscounting quota and reduced the interest rate for agriculture and small enterprises relending by 0.25 percentage point to support low-cost and inclusive lending to SMEs to help them resume business activity. Third, we've brought down the interest rate. On March the 30th, the winning bid rate for the open market operation reverse operation fell by another 20 basis points, marking a 30-point fall since the start of this year. Third, we've urged the whole financial system to provide more support to different sectors. The large state-owned banks should increase support for small and medium-sized enterprises. Policy banks should provide special credit support, and local corporate banks should serve the grassroots level. Our monetary policy measures have been effective. The scale of M2 and social financing is basically matched and slightly higher than the nominal GDP growth. Since our economy hasn't been fully geared, the new loans hit a record high. SMEs financing had an increase in volume, an expansion in the coverage, and a reduction in interest rates. The RMB exchange rate has stayed relatively stable. The 83rd Executive Meeting of the State Council confirmed further strengthening of inclusive financial support for SMEs. That includes, first, increase the rediscounting and relending for SMEs, for small and medium-sized banks by 1 trillion yuan. On top of the 300 and 500 billion yuan support already announced. This is designed to help a wide range of SMEs to free up credit. Second, we've lowered the reserve requirement ratio in a targeted way for small and medium-sized banks. Smaller banks are located in the grassroots level and they're in nature inclusive. Lower RRR rates for smaller banks is an important measure to advance the supply-side structural reform for the financial sector, to optimize the structure of financial support and credit allocation in a way to support the SMEs by freeing up credit and lowering their financing cost. This will serve the real economy. Third, we will increase bonds as a financing support. Financial institutions will be supported to release 300 billion yuan SME bonds. And the net financing of corporate credit bonds will be increased by 1 trillion yuan over the previous year. This is conducive to further increasing the sources of financial institutions. Looking forward, we will make our prudent monetary policy more flexible and moderate, adhering to a bottom-line thinking and draw inspiration from the phased changes of the economic and epidemic situations, make our policies more fine-tuned. We will strengthen the counter-cyclical adjustment of the total amount of monetary policy, handle the relationship between steady growth, risk prevention, and the inflation control, and achieve the growth rate of M2 and social financing basically matched and slightly higher than the nominal GDP growth. We will fully consider the constraints on SMEs and roll out corresponding measures to help them tide over the difficulties. Thank you.
Now, Mr. Zhou, please. Good morning, everyone. Under the strong leadership of the CPC Central Committee with Comrade Xi Jinping at its core and united efforts across the nation, the outbreak situation at home is steadily turning for the better. Businesses are being reopened in an expeditious and orderly manner, and economic and social orders are returning to the normal. As the virus is spreading faster abroad, there has been a growing risk of global economic recession. This has brought external impacts to our economic and social development. General Secretary stressed the need to step up macro policy regulation and implementation and provide targeted financial services to epidemic control and the reopening of businesses and the real economy. Following the decisions of the CPC Central Committee, the CBRC has taken a range of effective measures. We have guided banks and insurance institutions to support the reopening of businesses, upheld financial security and stability, and made notable progress. Statistics show that nearly 7 trillion yuan of new loans were issued, with an increase of 1.18 trillion yuan. Insurance institutes have played their roles as stabilizers in the economy. And in response to the outbreak, banks and insurance institutions showed their social responsibilities. They have made 2.7 billion yuan of donations at home. They are also making donations abroad. They have collaborated with our diplomatic missions overseas to provide free facial masks and other supplies to Chinese students and employees of Chinese institutions overseas. They have provided what they can offer to 59 countries and regions. We will continue to follow through on the decisions of the CPC Central Committee and State Council, ensure sound policy implementation, upgrade our service to real economy, forestall financial risks, and deepen financial reform to contribute to winning the battle against the virus and ensuring economic and social stability and sound development. Now the floor is open for questions. My question is that, compared with previous years, what's new about this year's special local government bonds? Thank you for your question. Acting on the decisions of the CPC Central Committee and State Council, this year's special local government bonds need to show more support to economic and social development and outbreak response. So compared with previous years, there are 4 things that are quite different. First, the size has been scaled up appropriately as mandated by the NPC and approved by the State Council. In these 2 years, we have allocated in advance some of the special local government bonds. Last year, the quota was 810 billion yuan. This year, we started early. We have already allocated 1.29 trillion yuan, excluding general bonds. As has been decided by the State Council, more of such bonds will be allocated soon. So combined, this year's amount is larger than last year's. So the size has been scaled up. Second, the issuance and use has been brought forward. By the end of March, $1.08 trillion of such bonds have been issued, with a year-on-year increase of 63%. More than 800 billion yuan have already been used. These numbers show that the issuance and the use of such bonds have been brought forward. This will help to strengthen macro policy adjustment and buffer the impact of the outbreak. Third, such fundings will be directed to where the projects are. While allocating the quota of new additional loans, such fundings will be directed to projects and weight towards regions with key projects, low risks, and an important role in boosting effective investments to speed up major projects and livelihood programs. So, the importance and preparedness of projects is a key reason for allocating such funds. Third, the spending of such funding have been optimized to meet the demand of outbreak response and investment. Such fundings were used for transport, infrastructure, energy projects, agriculture, forestry, water conservancy, ecological conservation, daily services, cold chain facilities, and infrastructure for city administration and industrial parks. On top of that, this year, the renovation of old residential areas in cities was also covered. Localities were also allowed to spend such fundings on emergent medical treatment, public health, vocational education, and urban heating and gas supply. The funding will also used to speed up the development of 5G, artificial intelligence, and other new tech infrastructure. This is also a new change. And fifth, the share of such bonds as the principal of key projects will be raised. Last year, the share was about 20%. This year, the localities will be allowed to use more of such funds as principal of key projects, conforming with relevant policies to boost social capital investment and let such funding to play a better role. That's all. Thank you. Next question, please. Since August last year, APR has been lowered by 20 basic points, which has resulted in contracting funds in banks. So what's your view on the trajectory of IAR?
Well, thank you for your question. Lowering interest rates from the surface shows the narrowing of interbank interest rates. From the PBOC side, we try to supply banks with funds and keep liquidity abundant. That will lower the financing cost for banks. This happened before. In the meantime, we will provide greater support to banks, especially to smaller banks. On the interest rate for deposits, that is the bedrock in our financial toolbox. It can be used, but it serves as the very foundation. So there must be more assessment before utilizing this tool. For example, the CPI is much higher, standing now at 5.3%, much higher than the deposit rate. We also need to consider domestic and international economy, the balance of interest rates, whether it will put pressure on depreciation of the currency. In particular, deposit interest rates hinges on the daily life of our people. Adjusting the savings rate must also take into account our people's concerns. It is a tool, but it must be further balanced. Thank you. I have two questions. First, how is the scale of government debt? Second, the smaller banks have a weaker ability to forestall risks. How will the CBRRC help smaller banks in forestall risks and deepen reform?
I'll take the first question. So, generally speaking, the size of our government debt has been growing up, but the growth has been under control. And in comparison, the share of government debts to GDP is quite low in China. By the end of 2019, local government debts, the amount of local government debts was 21.31 trillion yuan. If we use debt ratio, that is the balance of local government debts dividing by comprehensive financial resources, which is a generally used criteria in the world. Then the debt ratio was 82.9%, lower than the alert level in the world. That's for local governments. For the central government, by the end of 2019, the size was 16.8 trillion yuan. The debts of the central government plus the debt of local governments is the total debt, government debt for the whole country, and will be divided by our GDP. According to GDP data released by the State Administration of Statistics, the government's debt ratio of China was 38.5%, lower than the red line of 60% of the EU. Also lower than those of major economies and emerging markets. So generally speaking, according to this criteria, the risk of our government debts is under control. Thank you.
Well, regarding your second question about smaller banks, on how to help them deepen reform and forestall risks, China now has more than 4,000 medium-sized and small banks, accounting for more than half of China's banking system. For a very long time, they have played an irreplaceable role in supporting local economic development, serving private enterprises, SMEs, and agriculture. On the whole, my take is that smaller banks in China are running steadily in general, despite pressure from domestic and international markets and slightly rising non-performing assets. Their indicators are in a proper range. In particular, for the past 3 years, when the central government declared a critical battle on forestalling major financial risks, the CBRC has taken measures to help small banks deepen reform and diffuse risks. Our work includes the following. First, we've improved corporate governance. We've helped smaller banks reverse their development model that deviates from the main businesses or blindly pursues speed and scale. We emphasized the importance of calibrating their businesses to local needs and strengthen community and county financial services. For example, it is incredible that a small bank in northern China may release loans to some businesses in the far south. It shows the shortage of access to financing for small businesses, but it is not helpful because they do not know the full knowledge about the businesses they are lending to. Second, we've actively explored the integration of party leadership and party building into corporate governance. We've strengthened the all-around evaluation of management, team, and accountability. We've corrected, redressed their problematic behaviors, and improved the regulation of the managerial performance. Third, we've optimized the equity structure by keeping a strict control on the qualification of shareholders, strengthening the penetration management of shareholders and actual controllers. We've standardized their behaviors, resolutely removed problematic shareholders from the board, and avoided major shareholders using financial institutions as cash machines. We've held several financial institutions accountable lately, we found that even the chauffeur of the business owner becomes a shareholder in the company. Even nannies becomes a major shareholder. These are findings in the investigations. These are all problematic in equity structure, and we've struck hard on these irregularities. We've urged small businesses to strengthen the evaluation of shareholder qualification. And recently, we've also enhanced the regulation of asset management. The thing that we need to be highly vigilant about is that certain shareholders use financial institutions as cash machines. Fourth, we've assigned responsibilities to all relevant parties. The small banks must assume their main responsibility of risk prevention and control. They should be the primary party responsible for risk prevention. The CBRC will urge them to assume due responsibilities, otherwise they will be held to account. The banks are urged to increase their risk prevention system and operate in a law-based way. Second, the local authorities are urged to assume their jurisdictional responsibilities. The financial institutions, by and large, operate in different localities. In addition, the local financial regulators are urged to exercise their responsibility as the supervisors. Besides, the CBRC, as the financial regulator, must also assume our responsibility well. Since we are the supervisor, it is natural that we may offend some people or tread on their toes, but we cannot be rubber stamps. Fifth, we've bolstered the capital capacity. Help banks to enhance their self-generated capital replenishment capacity. We've also supported smaller banks to use multiple channels to broaden the sources of their capital. Local governments are also supported to inject capital into high-risk, smaller banks. We are also welcoming qualified, competitive private companies, including international financial institutions, to participate in the restructuring and reform of smaller banks. Sixth, we've taken categorized measures. In light of the realities, there's no one-time-fits-all approach. We've prioritized the tasks, keep it calibrated and well-timed. Our targeted measures ensures that the risks will not spill over. We've also strengthened regulation and have a harsh crackdown on the financial crimes and corruption, such as the transmission of benefits. Those committed crimes will be held accountable. All in all, through the above-mentioned measures, we've helped small and medium-sized banks improve shareholding structure, improve their capacity of financing, So regarding your question on the risk prevention capabilities of small banks, I would say I have confidence in that. Of course, stories are more telling than logic. Let me give you one example. A bank, Hengfeng Bank, more than 1 trillion financing capacity, but its previous two head of a president have been held accountable for financial crimes affecting its performance. So the CBRC has coordinated with other departments to remove their managerial team. The managerial team has been overhauled. Many of the problems are because of the people who do the job, so they are all removed. We've designated new leaders for the bank. Many of its decisions haven't been authorized by the regulators, but are done privately and secretively. So we've used judicial procedures to revoke these financial operations and held those accountable. The CBRC, the financial department, and the other local authorities have worked together to introduce new investors in the bank, successfully diffusing risks and restructuring the bank in a market-based way. This is what we have done to fend off the risks for small banks. It is fair to say that the bank, Hengfeng Bank, has now transformed from a bad-performing bank to a well-performing bank. That is what we call targeted debombing to ensure stability of the larger financial sector. In the future, we'll continue to do so to help small and medium-sized banks pursue high-quality development. That said, affected by the epidemic and economic downturn, and with their pre-existing problems in management, some smaller banks may face difficulties. We will follow market-based rules and principles to adopt bank-specific solutions, help them restructure with acquisition or merger, or setting up bridge banks, introduce new strategic investors, find the best way for them to restructure and reform. We will also fully assess the possible risks and make preparedness plans to guard against financial risks. That said, there might be some bubbles busting, but we have the larger picture under our control. It will not spill over to become a systemic financial risk. Thank you. Thank you for your question. What's your evaluation on the impact of the current pandemic? Will it go beyond the financial impact to go beyond the 2008 financial crisis? How is the central bank prepared? Well, thank you for your very important question. I know many of you are following closely on the economic trajectory and the measures in place or in the pipeline. And people have different views. On prediction of the world economy, my observation is it will be considerable impact, but when will the impact be ended? We're not sure. Well, that is the best I can share. We cannot see clear the picture right now. The epidemic is affecting global economy in three ways. First, on industrial chain. Some of the industrial chains have been disrupted, affecting the supply of parts. Second, on trade. Some products, after being produced, cannot sell because of dropping orders. Both these two factors are very prominent. Third, it also affects expectations. People become more aversive to risks. These are the three prominent impacts on the market. As to its future development, whether it will go beyond the 2008 financial crisis, it has not yet so far. Since February the 24th, global stock markets have fallen by about 25%. And compared with the 2008 financial crisis, it was a roughly 50% drop. Well, a 50% drop is what happens in every major crisis. But so far, what we see is a 25% drop. How about its future developments? We're not sure. One thing we're sure is that the IMF said recently that in 2020, the global economy may fall in the negative territory, and the recession may surpass the scale of 2008. That is a clear sign, but it also used the word could or may. So we're not sure too. In the meantime, we must also take notice that countries have introduced hedging measures one after another, and the depth and breadth of the epidemic containment measures have also been increased. That means we must keep a close track on the future epidemics of the disease. As to its impact on China, we haven't seen the Q1 data yet. Well, even if there was not an epidemic, the numbers wouldn't be good. But comparing March to February data, you would see March much better than the performance in February. So my observation is the impact of the epidemic on China's economy is temporary. China's economy will continue to show great resilience. And we have a rich toolbox and ample policy space to stabilize economic growth. This is what I think on the global economy and Chinese economy. What about our future response? Prudent monetary policy must be more flexible and appropriate, and we must give prominence to supporting the recovery of the real economy. That is the central government requirement, and it's well calibrated to the realities, and we will implement the decisions taken by the central government. First of all, we will manage policy intensity, focus, and pace in a phased manner. First, our focus was on containment, then on resumption of work and production. And now our focus is to perk up the entire industrial chain. That is how our focus changed in different phases. We must ensure the M2 and social financing match and grow slightly faster than nominal GDP. There was a credit crunch in the market, but we also need to be cautious against over liquidity. Second, we will ensure that the liquidity is reasonably abundant to meet market demands. Second, we will utilize the 300 billion special relending, the 500 billion yuan relending and rediscounting policy. Both policies have been announced and implemented, haven't been fully distributed. We will continue to follow through on its utilization. Third, we will implement the additional 1 trillion yuan quota for inclusive relending and rediscounting. The additional 1 trillion yuan will broaden the coverage on top of the previous two policies. And it will be smoothly connected with the previous two policies. Fourth, we will lower RR rates in a targeted way, ensure that reserve requirements play its incentivizing and guiding role. Fifth, we will carry forward with the LPR reform and guide banks to serve the real economy and lower the financing cost for businesses. Sixth, we will also strengthen international cooperation, foster a sound international environment to stabilize the international economy. And we will also communicate better with the markets and the media to make public and explain our policy intentions. Thank you. Thank you. I have two questions. First, on the 300 billion yuan and 500 billion yuan financial support, would you share with us the status of implementation? And on the additional 1 trillion yuan quota, when will it be released? Second question is on the financial department, financial ministries support to SMEs. What are the policy orientations? Will there be new measures to support them? First, on the 300 billion yuan relending facility. It is designed to support businesses produce containment supplies. 9 national banks and 3 local corporate banks have released to 5,800 businesses a total lending of 228.9 billion yuan. On average, every business received 40 million yuan of financial support. And the weighted average interest rate after discounting is 1.26%. This is the implementation of 300 billion yuan relending facility. On the 500 billion yuan relending rediscounting policy, it is used to support the resumption of business activity by March the 30th. Local corporate banks have released preferential interest rate loans of 276.8 billion yuan, supporting $351,000 businesses and farming households. The average financing is 552,000 yuan on an average interest rate of 4.38,000. While these policies are implemented following the central government requirements, the interest rate are kept within 4.55%. And you also asked about the additional 1 trillion yuan quota. The decision was made on the 84th State Council Executive Meeting. It is aimed to better connect with the previous 2 financial support policies and to better reflect market developments. The PBOC additional quota will be designed to support inclusive loans to SMEs. And the interest rate is the same as the previous policies, around 2.55%. This will help lower financing costs for SMEs, ease their debt burden, and broaden their space of maneuver. The relending and rediscounting quota will be provided to SMEs at a preferential interest rate. But we do not put a cap on the interest rate regarding the 1 trillion yuan quota, additional quota. We are fully prepared to guide banks and financial institutions to lower interest rates of loans for SMEs. This policy has not been physically discounted, but to our knowledge of the implementation of the 500 billion yuan facility, though there was no central government discounting, many local governments have decided to provide more support. So I believe the interest rate for banks will be materialized at a preferential rate. After the full implementation of the 500 billion yuan policy, the additional quota will be kick-started and there will be even new policies announced.
Well, since the outbreak, the Finance Ministry has attached great importance to the financing of smaller businesses, fully supported them to avoid capital chain rupture, overcome the difficulties. From the perspective of fiscal policies, we have adopted measures concerning taxes, interest subsidies, and etc. As has been pointed out by the March 31st State Council Executive Meeting, to encourage the development of commercial insurance products and cut the overall financing cost of smaller businesses. We have done the following things. First, the State Financing Guarantee Fund should see additional re-guarantees of no less than 400 billion yuan in 2020. And re-guarantee fees will be exempted for loans less than 1 million yuan. For others, the fees will be halved. Second, the fees of government-backed financing guarantees will also be halved, and the fees of comprehensive financing guarantee will be reduced to below 1%. We will also ensure that business in support of agriculture and smaller businesses of the guarantors should be no less than 80%. And third, where conditions permit, startup business loans will be extended. We will find ways to extend the coverage and lower the threshold. Key groups will be covered by this policy. We expect that in 2020, we will support 1 million personal entrepreneurs and 10,000 smaller businesses with an increase of over 50% compared with the previous year. We will further improve the startup business loans policy through interest subsidies. More smaller business will have the money to take off with less burdens. We will improve guarantees so to channel financial resources to smaller businesses and form a synergy to help them overcome the difficulties.
The stress test for the banking system in 2019 set it in scientific-based models, scenarios, and expert analysis. So the scenario is a not very unlikely model. After the outbreak, we've followed closely the developments and impact on the financial system and carried out some stress tests. The test results will be released through our stability report in a timely way. It is true that the outbreak has seriously undermined economic performance. Some banks see their risks rising substantially and will put pressure on the banks in their performance. But the Chinese banking system, by and large, has a good ability to absorb losses, and they have enough ammunition to fend off risks. By the end of 2019, commercial banks in China non-performing loans rate is 1.86%, much lower than the regulatory threshold of 5%. The loss preparation reserve has 55.8 billion yuan in the toolbox. Last year, Chinese banks handled 2.3 trillion yuan of non-performing assets. The banks have a diversified approach and enough buffering tools for risks. So my answer is there are certain pressure, but Chinese banking system is capable of guarding against the risks. Chairman Zhou, let me add that from the fundamentals of the economy, the stress test by the PBOC has taken all the extreme difficulties into account. So it's a very bad scenario in that test. But from the monitoring of our regulation commission, we believe the indicators speak for themselves. This year, we will further increase the handling of non-performing assets. Last year, it was 2.3 trillion yuan, and this year, the number will be even larger. And we will help replenish asset for capital for banks in multiple ways. Just like I shared in the previous question on helping banks to replenish sources of capital, there are many ways. On bonds, securities, debts, we will further broaden our toolbox. And we are also discussing new and creative measures. We will also match our policy response to market developments. I would say the Chinese market's performance testifies to the strength of the financial system, and you are seeing new capital inflow into the Chinese market. From the market performance, from the financial system's performance, I would say our banking system is stable and robust. Affected by the outbreak, many SMEs are encountering difficulties in their performance. What will the CBRC do to help them?
Well, the finance ministry have shared what they have done from the perspective for financial policies. For our part, we have also done something. Many smaller businesses have faced difficulties since the outbreak. An outstanding one is the lack of capital. So since the outbreak, we have taken some measures to ease the pressure on them. According to the latest data at the end of February, the balance of inclusive loans issued by 18 large and medium-sized commercial banks was 5.55 trillion yuan, with a year-on-year increase of 31.8%. The average interest rate was 5.22%, down by 0.22 percentage points compared with the beginning of this year. And the average interest rate of 5 major banks was 4.4%, down by 0.3 percentage points compared with the beginning of this year. And we have done the following. First, we have tried to increase the amount, extend coverage, improve quality, and reduce costs of credit for smaller businesses. We have worked to see that such loans with growth rate no slower than other kinds of loans and coverage no smaller than that of the beginning of this year. And 5, major banks should endeavor to see a year-on-year increase of 30% of such loans. We have also increased the share of first-time applicants. We have reduced the share of credit loans, increased the share of credit loans and renewed loans. Second, we have extended loan repayments. Such a policy is warmly received by smaller businesses. This provisional repayment extension without penalty interest rate payments will not downgrade the loan risk classification or worsen the credit record of such businesses. Now, over 700 billion yuan of such loans have been applied by smaller businesses, benefiting many smaller businesses and self-employed businesses. Third, we have scaled up credit support for smaller business in sectors and regions severely affected, including wholesale, retail, accommodation, catering, logistics, shipping, culture, and tourism. Because all these sectors are affected by the quarantine measures, we have asked banks not to withdraw, suspend, or delay credit. They are also asked to lower interest rates and surrender some of their benefits to these enterprises so that they can be reopened as soon as possible. We have made special arrangements for Hubei. This year, we will cut the financing costs in Hubei province for smaller business by at least 1 percentage point. Fourth, we have leveraged the counter-cyclical adjustment of policy banks and support the development of private business. We have encouraged policy banks to lower costs to smaller banks and offer private and smaller business funding in lieu of loans. Now, the balance of such funding has been over 180 billion yuan, with an increase of 17% compared with the beginning of this year, and this will be stepped up. Fifth, we have better used fintech to provide targeted services to smaller businesses, such as big data, cloud computing, online and offline services through the internet, mobile phones, and other means. Smaller businesses can access convenient services. 6, we have reduced financing costs for enterprises. We have better addressed bank fees. Cases linking credit line with savings will be seriously dealt with. We have encouraged insurance institutes to provide more financing through credit enhancement. And PBOC have required intermediate agencies to cut their service fees. We need to see that the dividends of such policies can be truly felt by smaller businesses instead of someone in the middle. So, financial stability is a precondition of economic stability, and enterprises play a major role in economic development. Smaller businesses are major sources of employment and concern the interest of our people. Because of the impact of outbreak, we need to work together to help them overcome the difficulties. So here we want to ask banks and insurance institutions to put themselves in the shoes of smaller businesses and offer them more help as they are encountering difficulties. If you put yourself in their shoes, it is really not easy to start up a business, from marketing, designing, hiring, and all utility fees. So we need to do more to better implement the good policies of the CPC Central Committee and State Council. The State Council executive meeting decided to allocate in advance additional special local government bonds. Is this aimed at responding to the impacts of the outbreak and how to prevent risks while using these bonds? Thank you for your question. The State Council executive meeting decided to allocate in advance additional special local government bonds. This is aimed at responding to downward pressure on the economy and to the outbreak. While making better use of such bonds, we need to forestall risks. This has also been a priority in our work. So to play the role and forestall the risks, we have done things in the 4 regards. First, we need to see early results. Localities are asked to bring forward the issuance of such bonds and endeavor to get it down by the end of the 2nd quarter. And such funds channeled to projects as soon as possible and play an early role. This has been more urgent as we are responding to the impacts from the outbreak on the economy. Second, select good projects. So usually, such bonds were used in 7 major areas. This year, there have been some additions and improvements. Localities need to select projects following the areas identified by the central government, particularly key projects. And projects we need to complete sooner or later. And subnational governments need to have good interagency cooperation and shoulder their jurisdictional responsibilities. The finance, development, reform, and other departments need to play their due roles and collaborate with each other. After the projects are identified, local governments need to report them to the Finance Ministry and the NDRC for approval. So the second is that we need to select good projects. Third, we need to ensure the use of such funds meets regulations and rules. The projects, while selecting projects at subnational levels and approving at national levels, these projects must meet rules and regulations and conform with the management of special local government bonds. That is to say, the bonds must be used for profitable projects for the public good, and there should be plans for balancing fund. While making actual progress, we also need to forestall risks. We need to have whole process regulation and supervision. to have thorough regulation of such bonds, we will follow every step of the issuance and use of such bonds. If any problem is identified, it will be checked and corrected. So last two questions, please. One for the Chinese reporter and one for a foreign reporter. The outbreak has impacted the supply chains. So what has the CBIRC done in support of the reopening of businesses along the supply chains?
China is a major manufacturer, having an important place in the global supply chain. With the growing international economy, many of the products have increasingly complex intermediary products in producing process. It becomes impossible for one or several companies to complete the design, manufacturing, procurement, sales of the products alone. And there are more well-defined division of labor. As far as we know, a leading company in one industrial chain generally is supported by 200 to 300 supporting SMEs. That means the industrial chain coexist in one industrial chain and they form an ecosystem. This time the outbreak has affected the industrial chains seriously by disrupting the production of the end products because of the shortage in supplying the intermediary products and parts. That's why we have looked into financial measures to support the resumption of work. Because the epidemic, since its outbreak, affects foremost the flow of people, information, and capital. These are important factors for modern economic activities. We have supported coordinated whole of industrial chain resumption of work. In light of the flow of information, capital, we've supported the downstream smaller firms with targeted financial support. Second, we've supported the leading companies with longer-term loans so that they can release more capital for downstream and upstream smaller firms. So we keep monitoring their payment efficiency to downstream and upstream and downstream companies. Otherwise, they will get a notice from the banks to make the payment promptly. Third, we've catered to the essential needs of the supporting SMEs along the industrial chain by working on new pledge financing products such as accounts receivable orders, warehouse orders, and inventory. It is expected that this year we will provide 800 billion yuan of accounts receivable financing for small and medium-sized enterprises in the industrial chain. Fourth, we also encourage the banking and financial systems institutions to strengthen their role as a stabilizer for foreign trade. We are cooperating with our international and foreign counterparts to stabilize foreign trade and the global supply chain. Fifth, we have developed specific systems for industrial chains. We are also encouraging cooperation between financial institutions to better link up their information, share their updates, and monitor their funds. To our knowledge, many banks have provided such targeted support to thousands of industrial chains. In the future, we will continue to implement fine-tuned policies to support the positive circle between finance and the real economy. The last question. To my knowledge, the newly announced special local government bonds cannot be directed to real estate sector. Will that affect the renovation of shanty towns? My second question is about the implementation of the special bonds.
The renovation of rundown areas is a major project concerned with people's lives. Following the decisions of the central government, different localities have been advancing this project. And good progress has been made. This policy has benefited many residents in such rundown areas. With years of efforts, qualified projects have been basically completed. Of course, there are certain projects that are facing difficulties. In 2020, in line with the adjustment to real estate markets, localities will keep to standards, assess the bearing capacity of the industrial chain, though not adopt a one-size-fits-all approach or resort to loans easily. And the policy will prioritize certain areas. This year, it is made clear that the special local government bonds should not be used for real estate projects. And as has been pointed out by the Central Economic Work Conference, to renovate old residential areas in urban areas. I've shared with you where the bonds will be used in this regard. That is, the renovation of such old residential areas will be covered by the special local government bonds. Given the current macroeconomic context, we will work for early progress. We will work to see that projects with early progress can be kicked off as soon as possible to form effective investments. You also asked about the special treasury bond. The COVID-19 outbreak has caused temporary impact on our economy. There has been growing downward economic pressure, particularly the virus is spreading abroad. This has greatly impacted global economy and trade, posing new challenges to China's economy. To effectively respond to the impact of the outbreak, strengthen macro policy adjustment and implementation, and following the decisions of the CPC Central Committee in 2020, we will appropriately raise a deficit ratio, issue special treasury bonds to send a clear signal to the market and boost market confidence, and help to complete this year's targets for economic and social development. To raise the deficit ratio and issue treasury bonds, this policy needs to be reported by the State Council to the NPC for approval. The specific plan will be made in light of economic and domestic and overseas situation and other factors. This is the end of today's press conference. Thank you.